from stuff that I need to take care of in about 2 weeks. What is this one? Okay. So the rest of the crew will be very happy to assist you in whatever questions that you have. The community is full of excellent traders, people helping each other out, giving each other ideas, and really it's a very active community. So no time to waste. Join us. Then there is a way of joining us for free, and that is our NFP competition. There are some really great prizes to win there from our partners as well, giving free access to for instance, to the Big Suit. LiveSquawk is giving free access to their platform, and we are giving away also free access to our community for, I think, the first 3 or so, the ones who have their guess the closest to the to what actually the number is going to come out for the NFP. And I remind you, one rule: only guesses to the original post will be taken into account. All the rest is useless. You won't be taken into account if you do not reply onto the original post. That's it. We also obviously still have our coaching program running, and also the trader funding program. And that is also a way of getting into our community, because if you take an assessment, depending on the size of the account which you take an assessment for, you will get access to our platform as well. And if you take the trader funding program assessment, you will also get a free one-on-one onboarding meeting with Mr. Blake Morrow. That is it for what the non-market stuff is concerned. So now let's go over to what was and will happen in the markets. Hope no one got caught by the NFP link. Angela, do you want me to just post it there? Let me do it quickly for you. There you go. Okay, there you go. There's the link, Angela. Right. First of all, let's go to that to those unfortunate geopolitics lines. We have to talk about them because they will keep the market on its toes, create weekend risk. We just heard from the supposedly official Israeli source that they are again rejecting peace talks. We've also heard from the Iran Supreme Leader that he instructed the Supreme National Security Council to prepare for attacking Israel. We had those rumors that they may even do so before the US elections. And then closer to where we are here, geographically at least, it is now said that the Ukrainian forces could face the North Korean troops in the as soon as in the upcoming days, unfortunately. So on the geopolitical front, it is still not going the right way. So bear that in mind for whenever you come in on Sunday night, Monday morning in the markets, after whatever happened for the rest of today. There could be some fresh headlines, unfortunate, likely headlines dropping there from the geopolitical front. What's happening in the rest of the world? First of all, we had, and let's do it like a bit timeline here. We had those numbers coming out of the US yesterday. Initial jobless claims dropping back a little bit, price index a little bit stronger. Now, what's encouraging, though, for the Fed at least, is the employment cost index continuing to trickle slowly lower. And what they also will like is that the consumer, the personal spending is still in positive territory. So that is pretty decent. We did have a very big drop in the Chicago PMI, but apart from a few algo blips, that didn't really impact the markets. So when we see like a jobs market overall, which is still doing okay, but as we have seen, the jobs coming down a bit, like showing signs of somewhere cooling down. But the labor cost is cooling, the job market is holding up in general, the consumer is still spending. We are still very much in a Goldilocks scenario for the Fed. So that is obviously there's a lot to happen before, but that is all else equal, still a sign that the Fed may slowly, there's no reason whatsoever to cut 50 BPs again, but they may slowly continue to normalize. Just seeing Himashu-san, I just posted it, yeah, in the chat room. Yeah, you're also asking about the competition link. So yes, that for this thing. Then we are sticking to actually what happened yesterday. Remember, I told you about those European data coming out a little bit better. Now we are starting to see the first reviews, and Citi is one of the first ones to start to review ECB growth. It's not a lot, but they are now starting to up their ECB growth forecast for this year to a whopping 0.8% from 0.7. Interesting though is that they reached and even went over the 1% mark to they think that next year the European growth will be 1.1%. Okay, we're seeing globally overall the euro doing pretty well, and although we have seen now today a bit of a setback, especially on the crosses, but it does seem that turning a corner is a big perhaps too big a statement, but that the perception of what's happening in Europe is improving. Okay, now let's continue. Yeah, we had this Canadian GDP out as well, very anemic, but they seem to be a little bit more optimistic for what September is concerned. It did not really impact the Canadian dollar too much. For those watching this dollar Canada, we're actually trading a bit higher than when this came out. I think that a lot had to do with the end of month. We saw a pretty decent spike on everything against the Canadian dollar, and especially the dollar CAD yesterday to the 4 p.m. London time. So I warned you about the end of month flows, which could have been a bit messy, and that was one of the dollars that was bought significantly yesterday into the fixing. Okay, what else do we have? Let's move just forward a little bit those on those numbers. We do have manufacturing PMIs coming out. The Aussie ones are still remaining below the 50 line. They ticked up a little bit, but we have to always bear in mind that a number sub 50 is not expansionary at all, even if the number is higher than the prior one. It shows some slight improvements, but the overall sentiment still remains in the manufacturing sector, still remains pretty negative. We did though have, if you stick to Aussie land, we did have a little bit higher than expected PPI. Also year on year remaining close to that 4%, and in turn we saw the investing housing finance dropping a little bit. All of that because next week, I think, if I'm correct in saying so, next week we will have the RBA. Yes, we do. Oh, actually on the US election day, good luck. It would take the whole mix. It's probably going to keep the RBA on hold next week, okay? And already Bullock was hinting at them being on hold for longer. She is relatively hawkish, so shouldn't change too much for the RBA next week. Then moving over to Japan. We had the manufacturing ticking up a little bit, well, a little higher than expected, but coming down versus the prior month. There's been some articles coming out saying that the Q3 GDP is going to give back a lot of what it gained in Q2. The expectations are for a number which is going to come out quite low, actually, 0.7 or so percent, versus what they printed a near 3% expansion in Q2. But the market is already thinking that Q3 could show a much weaker print. We had the quarterly Bank of Japan bulletin out as well. They think that the increase in the wages is going to continue to push inflation higher. Just hold on one second. It's going to push inflation higher, and therefore the Bank of Japan will be keeping on his rate path. Actually, some think, and I would not completely rule it out, in providing that they quite rapidly get a government which is not a lame duck government, and that is a risk. You know, I told you on the 11th of November, they are going to choose their next prime minister, so keep a very, very close eye on that one. But I would say that if things go smoothly, if there's no big accident or big downward spiral also on economies also in between, but I do think that front running the next Bank of Japan meeting is a bit too difficult, but I would not completely rule out that they move as well. In the meantime, the opposition leader Tamaki from the DPP, he's asking for the Bank of Japan not to move rates for the next 6 months, and that monetary policy should not be used to manipulate FX rates. Well, I mean, the DPP, they rejected both ends of the spectrum, as well the LDP as the CDP, proposals to go in ship with them to form the next government. So if you're not in the seat, it's always very easy to comment, I would say. That for Japan. Let's move on. We had the Chinese manufacturing PMI coming out and printing, that's an official number, just I'm not saying anything, but it's just an official number. You know what I think about Chinese numbers sometimes. It went back above 50. Not that it really impacted the markets too much. We did see relatively decent performance of the Hang Seng and the China shares overnight, but it's just decent. I think bigger fish to fry, and for whatever will happen to China and the Chinese yuan, I think the US elections will be a much bigger mover than their local data in the immediate future. All right. Then moving over to the UK, earlier today we had this the nationwide house price index. It is cooling down, and now we have to come back a little bit to what happened yesterday in the gilt market. As I showed you as well, gilts really did not like the budget, the first sight of the budget. Now, two things. I don't think we need to completely go and say like the sterling is doomed here, okay? And I don't think we are going to see a remake of the Truss Kwarteng budget situation. But I do think that the market, and it's going to be gradual, I do think that we are going to remain on a path which is going to be a bit risky for sterling. As I said, I see more risks than positives in the Labour budget this time. Okay, even though Reeves said that they are going to commit to fiscal and economic stability, said that market reactions to budget are normal. Also, the Treasury Minister Jones came out saying that it's normal for markets to react to those kind of events. I think we need to let a bit of time go by to see exactly what the effect will be on the sterling. But I do see more risks than positives in this budget, and we will have to see what business leaders are saying about all those increases in the national insurance and whatever other taxes. I've also seen that they are increasing. What is it? I forgot the term exactly, but it is interest rates carried interest also, and that is for private equities is perhaps for people having like shared profits and stuff like that. It may also be a negative. So I again, I see more risks in than positives. I do think, though, that we need to be a bit careful in calling the end of the sterling. It is not all right. It's all going to be a bit slower than what we think. Also, the moves, and I will repeat, the moves on the gilt market are translated by some of the media in saying that the market is screwing back on expectations for the Bank of England cuts. It has nothing to do with that. I mean, the market is trading nervousness around the budget. The market is trading higher borrowing needs. It has nothing to do with the Bank of England. I think actually over time the effect could be the other way around. If it has a big negative impact on wages, for instance, this budget. Okay, enough for the sterling for today. Moving over to Switzerland. Okay, retail sales, but this one here, this CPI here, this is continuing to come down, okay? And the procure PMI came in around last month's numbers, just shy of the 50 mark, expansion level, but nothing really to see there. But this is one that may push the SNB, who only meets every quarter, the SNB over the edge. And we already heard from Schlegel, and overnight we also heard from the finance minister Keller saying that a strong Swiss makes life difficult for businesses over in Switzerland. This is not the first time that we hear this kind of comments. Coming from Switzerland, I wouldn't take them very lightly, okay? We have seen for instance, over the turn of last year, remember Swiss franc was really extremely big into year end, and then we had like a pretty decent involvement and a big turnaround. SNB then starting to cut rates and things. We know that the Swiss franc has not weakened much yet because of geopolitics, for instance. It's still a parking place for Middle Eastern cash as well. So although most of that is not parked in Swiss franc, but it does support the Swiss parking space for whatever cash there is in some parts of the world. So that is and geopolitics supporting the Swiss franc. But I think I'm not saying they mean business to turn around the Swiss franc, but also supported by this CPI once more. I would assume that Swiss franc may finally be ready to perhaps weaken just a tad. Obviously, everything that we are talking about in the various currencies today may be completely obsolete if we get some surprise or some big discussions on the US elections next week, of course. But in the meantime, and I'm avoiding the dollar actually on every position that I take. In the meantime, perhaps Swiss franc could be weighed down a little bit. Then we had the Nokia manufacturing PMI, the unemployment change. Norway has an unemployment rate. Everybody should be jealous about that, but for the time being, it's not really impacting the Norwegian kroner. I think a lot is now depending on what is happening with risk in the upcoming sessions. We have seen risk come off a little bit. We've also seen preparations for the upcoming US elections. So I'm going to say, and I also already spoke about those FX transactions from by the Norwegian central bank for the oil fund. I'm going to say that the Norwegian kroner may be a currency that we need to closely look at for the turn of the year and perhaps early into next year. And then finally, this morning we had the manufacturing manufacturing PMI out of the UK, dipping below the 50 mark. A bit of negatives coming out there. Again, it's just around the 50 mark, but it is in below expansion level. Okay, so it's just perhaps just keeping those little weights on the sterling shoulders there right now. I think I'm through whatever I wanted to say that has happened. Yeah, I think that's good enough. What is going to happen? So this afternoon we're getting this US jobs report, and then we also have the ISM manufacturing out later on. It's probably going to be, unless we get big variations here in this IMM in the prices, and of course keep a close eye on the employment index. But we know that the manufacturing is a smaller piece than services. Okay, that is one thing that you need to bear in mind. And then bear in mind as well that depending on who's talking and who's looking at it, there's a lot of expectations this time that the weather events have played a role on those manufacturing payrolls, and also the BA strikes, so the Boeing strikes may also have had an impact. So expectations are for it to anywhere between to have weighed on the non-farm payrolls anywhere between 70 to 90 or so K, but it is a possibility. Okay, as we have seen from the ADP, depending on when they take this snapshot, it may vary. So keep an open mind for today's non-farm payrolls, and then this is going to be the test of the theory, saying that ahead of elections, they are never going to produce a negative number. So this is going to be the test of it today. So bearing in mind that those weather events may have impacted, it should put the surprise trade for this one on a yet again beat of this number. Okay, so if you get a number coming out closer to 200K, it's probably going have people say that the conspiracy theory to produce good numbers ahead of elections is well and truly alive. But a normal number should be somewhere closer to 100K. Okay, so this is what the expectations are. And I'm going to say, like, whatever comes out today, if it's relatively close to expectations, first of all, even if we get 110K, it's going to be sort of brushed under the carpet because of the weather events. Watch for this unemployment rate. Okay, so I mean, it could vary like 0.1. If you get a bit of a negative number there, it could tick up to 4.2. I would not really start to panic for the dollar about it. Okay, because anything that comes out relatively close, and I'm going to say the whole picture here on today's data, is likely going to create algo blips and then be very quickly forgotten in the advent of the elections next week. Okay, so take everything as it comes, but don't overreact on the reports unless we get, of course, extremely big variations. This is what I would say on those numbers. Okay, look a bit at prices, and I'm going to drag that UK gilt picture again in for comparison. If you look at what's happening in sterling, you have to now look at what's happening in the gilt market. Okay, and so we had this pretty big move. Don't call it panic. Pretty big move of the market reacting to the budget. A panic move would be, and I said last night that there may be a risk. Today is a bad day for the sterling as well if the gilt market continues to dive, which pushes yields up, of course. but we're quieting down a bit, okay? And so that is reflected in everything going on in sterling, okay? Cable, we came back from those prior low levels in the 128s yesterday at the height of the gilt dump. Cable was really coming down quite a bit. And again, here is the explanation or the visualization of the gilt market and yields markets not always having a linear effect or a positive correlation with what a currency does. This is a confidence matter. This is not a matter of the Bank of Japan is not going to cut as much, which should actually be putting sterling a bit higher. This is the opposite and has nothing to do with Bank of England rate expectations. So we went mid 128s. We have now scrambled back above but we're still above 129 for this afternoon. Two things for the sterling cable, of course. You have the sentiment on the sterling and you have the NFPs. So look at what's happening around, I would say, anywhere between 129.40 and 60. On a bad report out of the US, we could easily go and test this level, even perhaps overshoot a little bit. But I really doubt that on any report, I doubt, looking at the sentiment in sterling right now, that we break lastingly above 130 if such a spike would happen. On a good report, people may perhaps think back a bit more about the sterling weakness, and we could be in for a retest. And I think we should be in for a retest of the 128.5 level. This is the first. Just simply take those prior lows here. Simply take those prior lows here and in for the cable anywhere between 128.45 and 60. That, in theory, should be a decent support. Again, taking into account that the dollar move on the US report may be relatively short-lived. Euro sterling, as you know, I bought it yesterday after the event on the break of the 83.60. I managed to get rid of slices up to 84.40, and now I'm waiting. If you want to steer away from the dollar, this is one which may be more interesting to trade, because we could have like very violent moves on the dollar next week. It is not going to be safe from violent moves in the process either, because the elections will have an impact on risk as well. Okay, so bear that in mind. Don't go and like put all your eggs in one basket if you trade across, because even the crosses will be impacted by risk on the back of the elections. So risk is also of influence on a cross like euro sterling. Okay, but I would suspect that anywhere between 84 and 83.70, or even already 83.80 here, we are going to find deep buyers, especially those who perhaps have managed their positions just like me, letting parts go. And yeah, I'll be interested if it gets back down there to try along. As I'm going to be out, I'm not going to push my position to bigger levels right now, but I'm going to keep my stops quite wide, even perhaps just let the market do what it wants to do over the elections. If I ever keep positions open, I will manage them from a distance just before the elections as well. So this is about the picture. I think we are going to find dips here, unless we get some events in the gilt market. Now, Derez, you're asking about which one we need to watch. Well, first of all, I think you have to watch everything, but the market likes to watch 10 years, likes to watch the 2 years, likes to watch even the 30 years. There are levels a bit everywhere that the market is watching. I think you watch the 10-year, but there is something bizarre, and I'm not showing this very often. But there is something bizarre in the if you look at the interest rate differentials markets, and you know that, and I could be looking at the German rates as well, but I'm looking at the European rates because there's not so much happening in the spreads right now. Although we need to keep that in mind as well for risk next week, because it may, depending on the outcome of the US elections, there may be a risk factor there, a big risk factor for Europe. So if you look at the differentials, perhaps for the EU, you might go back onto German rates for a while, and then take the Italian, Spanish rates a bit separately. But like for instance, in the EU and the dollar differentials, you look at the shorter end. People also look at the 10 years for longer term directions. But there's something strange happening and I don't know why. Beat me, I do not know why. But for sterling, people tend to look at the 5 years differentials between see here, they look at the 5 year differentials here. And it's something strange, but it's just something that I picked up, that most people or in the market are looking at the 5 years. If somebody can tell me why, I'm happy to be told why this is the case. Okay, euro. Look, we're retesting here. I'm not sure whether we can still take this trend line into account, but it is strange that every time we do a hold and stop around there. So we had a little bit of an overshoot here up to 108.85. Again, it's 109 figure 10 that you really have to look at this afternoon, but already a close above 108.70.80, 108 here, 108.65.70, 108.80. A close above would be relatively positive for at least hours or into the sessions ahead of the US elections. And also, I've been talking about those green shoots. It is a possibility that we move into the elections just around 109 or so, right? This is it just gives me the feeling that we could. Obviously, this afternoon's job report get a surprise move. We could be back trading low 108s just around here somewhere, 108.10 max. I would say I would be surprised if we close the week below those lows here. I would really be surprised, taking into account as well the European greenish shoots. Dollar yen, I told you it's moving. It's moving a bit more than what we were used to years and years ago. But the levels are relatively clear. All right, the levels are clear going into the U.S. jobs report. 151.70, 80 figure, and then the top side we could include this one here, but that's a bit close perhaps. But the top side is clearly there, 153.40, 153.75. This could be a double top. Imagine that we test it again this afternoon, this 153.80s, let's say, and cap. That could be relatively significant as well going into next week. But again, short term, okay, short term people. I mean, I really am not going to advise anyone to have longer term positions. And I'm just going to repeat this right now. Whatever you have in position can be stopped out next week if you use if already you use stop losses, okay? I'm always talking, and it is common sense to have stop losses for especially for, I'm going to say, non-professionals or people who are not building on extremely long-term positions. It's always very much advised to use stop losses. So for those trading shorter term, be very, very, very careful with what you have in the books next week. Any position can be stopped out, okay? And I'm just going to use the example of the dollar yen. You can walk in on Wednesday, dollar yen having traded 155 and being stopped out on a short, and then it's trading back down to 152. If you're long, it could have traded down to 150, 149, and we're trading back at 152. Everything is possible in any direction on those US elections, okay? So I just want to stress that for everybody. Okay, let's look at what's happening in the Schweiz, Switzerland, okay, Switzerland. And then in particular Euro Swiss this time. We have again broken the smaller one. Also, I was talking about this 55 DMA, which is around 94, the figure. We are above now on those lower CPI numbers, and we are in an attempt to break above this daily trend line, okay? We are in an attempt to do so, right? If it's going to hold, I don't know. But risk is going to, I think, determine that. But if it starts to hold, I think finally, there may be some kind of a move in the making. And why I'm looking at Euro Swiss in particular today is, again, because I want to eliminate most of the dollar risk that I would have. But this and I'm looking at the euro because the sentiment towards the euro is changing. I sense a change in sentiment. Of course, that can be undone on the next set of data, obviously, but I do think that the sentiment for the euro could be in the process of changing a little bit. If that were to be the case, then we finally may have the potential for this euro Swiss to move back into higher levels. Take, for instance, 94.85 is the 100-day. It's also the 38.2 of the dump that we saw from May into August, and then into perhaps more the 95 zone. I'm just saying it's possible. I'm small positioned in the direction, so I'm saying it's just possible. I'm going to look at what happens around 94, 93, 85. If it starts to disappoint again, I don't think there is any use to have Swiss franc in position for the next 3.5 decades. But I think there is a kind of potential building up there. Let me just look at what you people are talking about. Okay, Lee, Simon. Okay. All right. So dollar Swiss is still a different picture. Dollar Swiss is still hesitating. Okay, and we really are going to need to build either on support of this 86.70 and break above 87 once and for all. We are going to need this. We are in a bit of a zone here, but we are going to need to break above to keep going, okay? On the underside, I would say any return back to low 86s, keep a close eye on. Also, I would say, bear in mind what those people at the SNB and the finance ministry are saying in Switzerland. I do think that there is still a risk that SNB may show up, perhaps not in huge amounts, perhaps not to completely reverse this higher. But remember, they are managing their FX reserves, equal legs, relatively equal legs between the dollar and the euro, okay? So there is a possibility that if you see a bigger dump on the euro Swiss or on the dollar Swiss, that the SNB may show up, okay? So any move lower and a bit of a surprise move back up, maybe them showing up, all right? Last look, okay? Last look, and then I'm gonna let you guys go. Gold has held around the first little zone here. Remember, we were trading in that 2730s, okay? And we went back into the 2730. As I said yesterday, potential about managing the books, taking profits, reducing the size of the positions on the Trump version 2 trades, and it happened yesterday. So I'm pretty happy to have seen it happen and not starting to buy tops and stuff like that. And we're holding in this little zone here. So this is the first zone of interest. Bigger one, I would say, just around the 27 level. And then for the days to come, watch out what's happening just below 27, 26.85, 27. That should now start to be supportive. Angela, yes, technically, yes, but I think there's so much to happen because we had similar here, and then look what happened. It just went back up, you know. I'm not going to attach too much importance about what candles are telling me today, but just waiting for what is to happen next. Because if you get in to a lesser extent the Kamala Harris election, but if you get a Trump election, this thing is probably not going to stop before you hit 3K. Okay, this is what I'm thinking about gold. Silver also interesting, came into my first re-entry zone, just hit it. I'm relatively happy. So as you know, I was letting go parts even of my long-term position here. Went back to really small, a bit too small actually. So I've entered a first one, but if for the more longer term build-up, I'm going to wait and see what happens. Obviously on the elections, I'm not going to leave any firm orders in, but definitely I'm going to be extremely interested in what's happening in this zone here to potentially build on more long-term positions. Again, this thing is probably going to be a wild swinger over the elections. So be very careful what the market thinks about um, industrials, about what's happening on the economy, what's happening on inflation. Just listen to what the markets are telling you. Okay, this could be a very big swinger. Any negative effect, because this is an industrial metal, silver. Any negative industrial effect or observation by markets, we could be trading back down to 30. Okay, this could really move 10%. Okay, on the elections. All right, and I'm going to leave it there, gentle folks. I'm going to wish you all an excellent 2 weeks before I come back. Don't do anything stupid. I don't want to hear any horror stories when I come back. Okay, manage your risk, manage your risk, manage your risk over the elections. It's going to be wild. Okay, so last thing. Oh yeah. Now I'm going to your no, hang on. I'm going to your comments. Aussie Kiwi. I haven't traded it, but there should be a bit of support around this 109.80 Joao in the shorter term. I think I'm going to tell you honestly, I have no idea on the next move in the Aussie Kiwi. I'm just looking at the levels. It capped just shy of where really the bigger level was, around 111. We're coming back here. I think you're going to be really watching what's really going to go on. If you get another leg lower, I think here is decision time in the low 109s, 109 and a quarter. Anywhere 109.20, 109.40 is going to be your level to watch. And Simon, in the UK, you have guaranteed stop loss. That is absolutely a magnificent thing for those having that. You avoid the slippage. That's a great thing to have, of course, if you can have it. Ali, DVG, Japan, Euro, Sterling, like these days, GB talks and yields back in whatever. Okay, yeah, okay. So it's just a general comment there that you gave to Derich. Okay. Yeah, Derich, the 30-year is really, if you plan to have positions for longer term, knowing what the bond market is telling us, you could look at the 30 years. I mean, for very short-term FX moves, they are not really useful, but it's very useful for people who planning to have like longer-term books and things like that. You're a short Aussie cat, Ali. I have it on, but whoops, what is that? I have it on, but as you can see, I haven't even charted it. You're short Aussie cat. I don't know, mate. It's it's in a bit of an upward channel to me. So you should find support around 90.70, but we are trading comfortably higher. So yes, you can go and have a bit of a look. This perhaps is interesting if you dive back below this 91.30. We may have a look there at 90.70s, but I'm not really one to trade Aussie cat because I don't really have a clear view on either one of them, and I wouldn't really know what to think about the correlation between both. They could go actually a bit hand in hand if you see a big commodities move or oil move or also, you know. So I'm not going to give my opinion on this one, I'm afraid. All right, so that's it for me, guys. Everybody have a good time, and we speak to each other next time. Next week, Ryan is back and he's going to take you through the elections. He's going to be so happy about it. All right, have a great November, everybody. Bye-bye.